Well, good evening, everyone, and welcome to this meeting of the Governance and Audit Committee. Obviously, a very important meeting to consider the statement of accounts and our colleagues from Audit Wales to provide their report. Obviously, this meeting is going to be recorded, and if you are in the chamber, then if you could ensure that your mobile phones are switched off, and if you do need to speak, just raise your hand and I'll deal with you should you need to speak. If you are online, can you press the hands up button, and then that will come up on screen, and I can invite you to speak. And on that basis, if we go to item 1 of the agenda, which is apologies for absence.
Thank you, Chair. Apologies from Councillor Gareth Ball, Mark Cooper, another councillor, and Matthew Evans, Chair. Thank you.
Thank you, Gareth. Are there any other apologies? Nope. Okay, item 2 on the agenda are minutes of the meeting held on the 15th of September 2025 for correctors only. Someone prepared to move, please? Thank you, Councillor. Do I have a seconder? Are you available, Councillor Prothero, to second? Thank you.
I am indeed.
Thank you very much. Anyone against? No, thank you very much. Item 3 on the agenda then, declarations of interest. Are there any declarations of interest? No, there are none. Item 4 then is the audited statement of accounts 24-25. We've got Gemma, I believe, is going to take us through this and she's got a short presentation. But just to remind members, obviously we're at the end of the process here. We've got the letter from Audit Wales, which provides an unqualified statement of accounts. There are some recommendations which will be coming out, and we await the report which will come out in due course from Audit Wales in regards to the accounts addendum report, and obviously if you can give us an indication when that's likely to come out, that would be extremely useful. And on that basis, rather than, unless there's some burning questions from members, I would suggest we wait for that report and then we can discuss it in detail in the lessons learned report, which Gemma and Matt and the team normally provide after the event, and we can discuss it then. So I'm suggesting that we await that rather than sort of rehearse it and then do a dress rehearsal and then have another shot later on. So on that note, Gemma, over to you.
Thank you, Chair. And I do have some slides, but I promise to fly through them. So if there are any questions, we can pick them up then. So we're just going to start on slide 4, just setting out where we are in terms of the audit progress. So audit commenced in July 2025, following completion of the accounts on 30th of June. Committee have received amendments to the accounts that have been agreed as at the 18th of November, and there were 2 supplementary sheets for the cash flow statements that were circulated by Democratic today, which set out the amendments that hadn't been made that were agreed subsequently to that. The Big Fresh Catering Company audit is ongoing, and obviously that is within the Vale of Glamorgan's accounts because of the group accounts that we hold. There is an outstanding pensions issue relating to those accounts, but it's not thought to be material to the council's accounts, but that is reflected in the auditor's reports. In terms of the key headlines, if you could go on to the next slide, Reese. I'm not going to go through these because they're within the report, but the usable reserves have moved very slightly, but that's due to the City deal adjustments that we've made on consolidation. And usable reserves have moved, and that's largely due to the capital adjustments that we'll run through as we go through the report. And the value of property, plant and equipment has, whilst it's increased on last year, it's reduced when compared with the draft accounts, but I will run through those amendments. If you could go on to the next slide, please. Thank you. So Mark and John will pick at this when they come to their report, but this just sets out the kind of materiality thresholds that we are dealing with when we're coming to our accounts. So broadly, we've got this materiality level of 5.6 million. There is a triviality limit as well, but we're talking about lower materiality limits, and we're talking about remuneration and related party disclosures. If you could go on to the next slide, please. So I'll go through this slide slightly slower because there's slightly more on this one. And of course, Mark and John will pick this up when we get to the Audit of Accounts reports. But this is the summary of amendments that are set out in an appendix to the auditor's report. So there were some amendments that were made between cash and creditors, and that reflects the cash that the council holds as stewardship accounts on behalf of some social services clients. So we agreed to remove those from the accounts because it's not the council's money. There were also some amendments to increase cash and increase creditors because we'd incorrectly accounted for the year-end balances around payroll, so HMRC, teachers' pensions and Cardiff and Vale Pension Fund. And that's purely down to the fact that it's the first year. Someone in my team was doing ledger control and they did the steps in the wrong order, but we put in things to make sure that doesn't happen in future. Employee emoluments, we've got some changes to correct the bandings at the top end of the bandings disclosure. And we've also amended the director balance, so it just shows the full year salary relating or the salary they received relating to the director role rather than their full year's pay. We've included the operating lease income disclosures. We obviously got a bit excited implementing IFRS 16 and stripped those out, but we put those back in. There's an adjustment to the debtor control balance, which impacts creditors and debtors, and that's a value of 700,000. So there are a number of capital adjustments. I think this is largely due to new accounting process in the teams. So I don't think I've got any concerns about this in future. So there's an adjustment for transferred land, impacting revaluation circa £2 million. There's an adjustment for nil net book values, which doesn't have an impact on the bottom line of PPE, but does affect the gross carrying value and the accumulated depreciation. There are some amendments around the adoption of IFRS 16, but I've got a separate slide on that. And some of these capital adjustments impact unusable reserves. There is an unadjusted misstatement of 580,000, but we have made some amendments within the disclosure notes of the accounts for consistency. And I'll also pick that up on the next slide. And related parties, we've not had a great year on related parties, but I will go into that on the next slide as well. So if you could, yeah, that would be brilliant. Thank you. So there are some new disclosures within related parties. They are relatively small, but, broadly meet that materiality threshold. There's one that is below that, but, are in accordance with the code. And there are some amended related parties disclosures as set out in the bottom half of the slide. And these total quite a significant sum. And we will be looking to amend the process for collecting these in next financial year and improving our QA. If we could go on to the next slide, please. So just to pick up on where we are with City Deal and Cardiff Capital Region, CJC. So the audit's been completed of the City Deal 23-24 accounts during the audit period. Draft accounts were received for 24-25 and Audit Wales have audited the material balances of those accounts during the audit period. So as part of the amended accounts that you have before you, we have consolidated the amended 24-25 accounts as part of our 24-25 audit amendments, if that makes sense. Going into next year's accounts, I think we feel like we're going to be in a better position. So City Deal have obviously largely caught up and they're aiming for their draft accounts and prepared circa the 31st of May, which will enable timely consolidation and audit next year. So I think we're looking at a far better position there. On to the next slide, please. So in terms of capital amendments, we do have some changes around how we've adopted IFRS 16. And I think I was expecting some. I'd have liked fewer, but we are where we are. And I think these are all things that we'll be in a good position going forward into next year. So we've been using the SIT for asset management system to reflect accounting for leases, and we did have some introductory issues with the way we recorded them. So there are some adjustments. So 1.13 million of depreciation had been admitted, and we put that back into the accounts as part of the amendments. We hadn't accounted for the dilapidation costs, or we had allowed for it, but we hadn't allowed for it as a provision. So that's been amended within the accounts, and those changes in part have had an impact on the opening adjustment, on the capital adjustment account for the adoption of the leasing standard. If you go on to the next slide, we've had some other capital amendments as well. So one is relating to transfer of land for new council dwelling developments, and that was rectified within the audit period. Some equipment disposals around that nil value review that doesn't affect the bottom line of PPE, and we're going to be changing our policy, so we look at that equipment that's over 5 years going forward rather than 10 years. And there was some changes around the way that we were accounting for non-enhancing expenditure. So we were putting the enhancement on, but where we were applying indexation, we were going straight to the valuation as opposed to stopping and putting the impairment on first and then going to the valuation, which does actually have an impact on whether those changes go to the capital adjustment account or the revaluation reserve. So whilst it doesn't impact how am I explaining this? It doesn't impact the value of PPE. It does have an impact on the value of the revaluation reserve and the capital adjustment account. So that's been amended during the audit period as well. If you go on to the next slide, we do have one unadjusted misstatement. It's quite a complicated situation, but I've tried to set it out on this slide. So this relates to 2 properties that were appropriated from the HRA account to the general fund, so to children's services in 24-25. The original purchase by HRA was grant funded, and the appropriation to children's services was also grant funded. So we checked with the grant body and they said that this is acceptable as long as the HRA purchase was replaced. Now, unfortunately, it wasn't replaced in 24-25, and so the correct accounting would have been to unapply that original grant so it could be held and then applied when the purchase took place, and we didn't do that. So the purchase is taking place in 25-26, and at that point, the accounting will be correct, and because it affects a lot of disclosures, it's quite involved, and whilst the value isn't insignificant, it's relatively small, we've chosen not to amend the accounts for it, but it will be rectified as part of the 25-26 position. Okay. If we go on to the next slide, please. So very briefly to touch on the annual governance statement. Are you happy that I just fly through this? Or yep. As you'll be aware, and you've seen the annual governance statement earlier in the year, assesses the kind of corporate governance arrangements across the whole organisation, and there are no significant changes from the draft ISA 260 that was not ISA 260, the draft annual governance statement that you saw in July 2025, and that gave kind of reasonable assurance. Okay, thank you. And then in terms of external audit assurance, this is also one of the appendices in your pack. So I think the report says that audit wrote to us in April 2024, but they actually wrote to us in April 2025, and the council's responses, which are subject to Governance and Audit Committee's agreement, are set out within the appendix. I think sets out that there are, no specific fraud issues, that we have complied with laws and regulations, and there's some assurance around related parties and disclosure of related parties in the pack as well. So at this point, I'm going to hand over to my Audit Wales colleagues, if that's okay, to take you through the audit of accounts reports. Thank you, Mark.
Okay, Mark, you're going to do a bit of a dual, a double act with John, is it? Or are you going to take us through it?
I'll take the microphone.
Oh, sorry. Yep, that's on. Yeah, I'll go through it. John may come in on some of the questions and things like that. You've had an excellent update there from Gemma, covering quite a bit of detail, which has been great. So that kind of overlaps quite a lot with the audit report as well. So I'll take the audit report as read, and I'll make a few points. I'll make a number of points just to draw certain things to your attention, but I won't repeat any of the points that kind of Gemma has made because they've been very clearly set out. So I'll just put the old reading glasses on, and The key one key thing is to say is that this audit report discharges our responsibility to report to you as the GAC ahead of your considerations as to the recommendation you make to full council that meets on the 1st of December. So this reporting is an important part of the process, and for you to be aware of it before you make your decision out of this meeting. The most important message out of all of them is that we've got a proposed unqualified audit opinion being a positive audit opinion, and the accounts being true and fair. So of everything that's said today from Gemma and from myself, that's the most important thing, a clean opinion on the accounts, which is a great outcome. A couple of key matters to draw to your attention. In our report, there are two items early on. First, opening couple of pages where we say there are a couple of matters that are still ongoing. One of them is that we would still check in the final draft account when we submitted the report. That's been done now and concluded in terms of checking that account, the final draft account. So that's been checked. The other one is what Gemma did touch on, which is the Big Fresh Catering Company's accounts still not certified. The audit is open because of a pension issue to do an actuarial matter, which is only relating to about 5-6 staff relating to one of your comprehensive schools that moved from the council to the company. And it is material to as Gemma said, to the company, but not material to your group accounts where you've got the 5 million materiality. But we did want to make reference in our report that those accounts are uncertified and remain open, so you're all clear on that. Appendix 1, that sets out our risks. Now, it's the starting point of Appendix 1, which is quite long. It's probably the longest part of the report, but its starting point is it sets out all of the risks that were in our audit plan that came to you in, I think it was June this year, and it gives you an update. And in that update, when you read down there, what we say in the vast majority of those is, you know, the outcome was satisfactory. We did the test and we said we were going to do, and the outcome was satisfactory. And in some of them, it says that we did some extra work, and we got where we needed to get to. There's one that we do raise in there, because we also raise in the report where we raise any new risks that weren't in the plan, but since featured. And the one that we have raised in Appendix 1 is the related parties controls in place at the company, the Big Fresh Catering Company. And we did, and the auditors of the company and Gemma and Matt did some extra work around declarations of interest and so forth to give us the assurance that we were seeking. So there is that one new risk there. I've just been logged out here. The uncorrected misstatement that Gemma mentioned, I won't repeat that, the £580,000. And Gemma also went through the corrections, the corrected misstatements, which are appended as well. It's probably a reasonably long list of areas there, but what I will say is no significant issues arose throughout the audit that we would probably say, you know, the kind of yikes moment. Oh, yikes! We've got a potential problem here. This could be quite widespread. It could require a significant amount of extended testing, audit testing. Nothing has arisen of that nature. But there have been, those corrections which have been important and above our trivial levels, and we draw them to your attention. But generally, there were no kind of big concerns, if you like, as we were going through the audit in that sense. We do have a short section in the report on other significant matters. And we do raise one, and it's just about some of the delays with the audit evidence, the information that we need to facilitate the audit, and also some of the responses to queries. And what we kind of say in the report is next year, if you're a tranche 1 audit, in other words, you give us a set of accounts signed by the end of June, we are working to certify by the end of September. And that's what we're working to. And there'll be a number of councils and other public bodies, local government bodies in that area. So the importance next year will be, heightened in terms of that timetable being 1 month shorter than this year. So we make that observation in the report. By the way, I should have said on the previous point, the corrections. We do say in the report that adding all of those up, the impact on your general fund is a £40,000 impact. So the bottom line is barely affected. and it's affected in a positive way by the £40,000. So overall, they all add up, and it doesn't come to a great deal on your bottom line. Subject to you not approving the accounts, sorry, but subject to you recommending the approval of the accounts to full council, and subject to them taking that decision and approving those accounts, the Auditor General is scheduled to certify on the 3rd of December, 2 days after that meeting. I was just going to flag out a few things that continue until the 3rd of December when the AGW is certifying. Our PBSE post-balance sheet event checks continue from now until that period. And that can be media reviews, reviews of any kind of any minutes that are issued by the council, discussions with officers potentially, but things that could be significant material and have a relevance to 24-25. So something could come up tomorrow, be very significant, could be a financial gain, a financial loss, but it might have no relevance to 24-25. But we keep that under review. The other point, which I think you're all familiar with, or most of you probably, is that on the day of certification, the 3rd of December, the Section 151, the responsible finance officer has to confirm that he would still sign the accounts that, let's say he signed them on the 1st of December, he would still sign that same set of accounts on the 3rd of December, and he's not aware of any significant events that really affect those accounts. So that's the factor as well. And the other factor that's unique to local government and to councils is the objection by electors. So electors in your area, they can object to items in those accounts, linked to those accounts, correspondence where they write into us and object, and we will consider it. And they could be raising something that's potentially quite significant, or they could be raising something that, you know, within a space of probably a couple of hours, we could determine is not significant enough to hold up those accounts. But there could be an objection that comes in that we need to consider between now and the 3rd of December. Other than that, it's a case really of thanking officers, or not just finance officers, but the audit and sample transactions and balances go to many places within the organisation. Internal audit as well, of course. So there's plenty of officers, mostly finance, but not solely. Monitoring officer, you know, meeting with her a number of times to talk about litigation cases and things like this. So plenty of people we'd like to thank. Yeah, that's it really, and happy to take any questions.
Yeah, thank you, Mark, and thank you, John. Even though you didn't participate, I think Mark's done it all. Can I firstly say, I think we always thank the staff, but we also got to thank you and your team as well, because I think it's it's a two-way street really, and I think building good relationships makes the job a lot easier. Not saying it's not difficult, but it does make it easier. And you know, your staff dealing with it in a timely manner, as is Gemma's, and she's got a perfectly small team of people, I think, to do this, which you know, is people are fully aware of, because you know the team is stretched, and I think the message certainly, which I read from your report when you read it, was certainly timeliness of responses. And I think sometimes, you know, you've got one person doing 7 jobs here, and sometimes that timeliness, it doesn't come to bear. So I think it does need to be addressed in due course, and I'm sure Gemma will pick it up when we do the lessons learned report for us to consider in due course. But overall, just to thank you and your team, and certainly Gemma and the team, and you know, with Matt's leadership to get this where we are today, which is you know, a good place to be, because I know some authorities haven't submitted yet, and some are going to be waiting for ages to get them signed off. So thank you very much. Thank you for the message. And again, it's very, very important that people note that we've got an unqualified set of accounts. Despite everything that's been said, you know, it's a good place to be. You know, we may not be having this polite conversation if they'd be qualified, but you know, it is a good place to be. And I think we all appreciate fully that something could happen in between, but clearly we hope that doesn't happen. And you know, we're off and running now, not only into the budget cycle for next year, But, you know, we're only sort of 4 months away for Gemma to start closing the accounts again for this year. So, you know, it's a very busy time. So thank you for that. I will ask, open it up for questions, but I've got to say, obviously, we're in a position whereby we've got a set of unqualified accounts. There is the document, because that's one question I was going to ask, is within the report, it says there will be an accounts addendum report submitted in due course. I'm just wondering when that will come. Will it come in December, or, you know, how is that going to be timely delivered to us? Because one of the recommendations I'll be adding into this report is that we have a lessons learned report based on that that accounts addendum report, so that we can actually discuss it in this committee, you know, to say where lessons learned, you know, where, and Gemma and Matt will come along to say, look, we understand that, this is how we're going to improve it next year, etc., etc. We had one this year, so we'll have one next year as well. So, you know, it's a continuous organic process, isn't it, this really? And, you know, as things move on. So if you could just indicate when that report is coming, and then I'll open it up for questions if there are any.
In terms of that report, I don't know when the GAC in December is, which the date of that meeting, but that's probably unlikely. What I would expect us to do in December is to send the draft of the report to officers. I'd expect that to happen in December. And then where we raise recommendations, I don't think it's going to be a particularly long list or anything, but there are some points to raise coming from the audit file. We then look for the management, as you know from previous years, there's the management responses and the implementation dates. The first thing it says is agree or disagree, because you can disagree on a recommendation, but at least that's a matter of record. So a draft report to the officers in December, we should certainly achieve that. So I do think we're talking about your GAC after the December meeting.
That's okay. I just wanted to know when the officers were going to get that report ready for the management response, and at least then we can sort of program it in. I would have thought sort of February, March, so we get that report at that time, because obviously we've got to allow the management to respond to any recommendations. There'll be a discussion, I should imagine, with yourselves then, and then once that's set, you know, Gemma and team can bring a report back to us then to highlight those lessons learned and how, you know, we're going to address that going forward.
Could I just say a couple of things on that? So I think the timing of that will work quite well. We've talked about having a lessons learned session. That's not just for us. We'll be jointly with Mark and his team. I think we can bring those two forward together at the same time. Obviously, there aren't going to be any surprises in the report, so it's not as if that's holding us up in any way from the work that, as you've spoiled the evening, really, saying that we've got to close the next set down in 4 months' time. But as we plan for that work, and obviously, you know, we've for Gemma and team, we've effectively had a new Audit Wales team to work with this year, so that those sort of relationships always take a little bit of time to bed in as well. And we are grateful to Mark and team that they held back resource when they had to work on the Welsh Government accounts to see our accounts through to fruition. So I think with some of the lessons learned, without saying what they all need to be, Mark's mentioned the September 30th deadline for next year for the audit. And I think it would be really important between our two teams, we're really clear when our resources are both available because of the how small the accountancy function is here.
Yeah, thank you for that. And obviously, Matt, in between, you've got to set the budget as well. So, you know, no real pressure on you at all, really, is there? But there we are. Are there any questions from any members? No questions? Are there any comments? No comments? Okay, if we got the recommendations then, the recommendations in the report are set out on page 3. And basically that the recommendations is that we recommend to approve the final statement of accounts and governance statement to go forward to council for final approval at Appendix A and B respectively. B, we recommend to delegate authority to the 151 officer in liaison with the chair of Governance and Audit Committee to make any minor adjustments to the final statement of accounts and the annual governance statement as necessary. That we recommend to approve the response to Audit Wales audit inquiries at Appendix C. 4, we recommend to note the draft Audit Wales ISA 260 and the management actions agreed by the Vale Glamorgan Council. And another recommendation I put there that a lessons learned report to be presented to Governance and Audit Committee as soon as reasonably practicable based on the Audit Wales accounts addendum report. So I'm prepared to move, please. Thank you, Councillor. Good, John. Do I have a seconder? Thank you, Councillor Prothero. Anyone object? No objections. That's carried. Thank you very much. Item 5, any other items? I have no items. There are no items in part 2. Can I thank you all for your attendance? As I said, thank Mark and John for attending from Audit Wales. So, it's always great that you're here to answer the questions and to take us through the reports. And I now close the meeting. Thank you very much.